Welcome. I'm Nate Hoffman. I'm the Director of National Sales with SwipeServe. And today in our Merchant University series, we're going to talk a little bit about how the merchant industry works. We think this is really important because so many people are shopping to save money. But more importantly, they need a basic understanding of how the actual transactions happen and who sets rates and how to get the best deal. So here we go. We're going to talk a little bit about the types of plans that you have. We're going to talk about the equipment shell game. We're going to talk about contracts. We're going to talk about termination fees, check guarantee programs, and rapid advance loans. So hold on, here we go. First thing, all transactions use one conduit, and that's interchange. Interchange looks at all 7,000 different types of credit cards and debit cards and puts the actual discount rate and a cents per transaction every time they're used, regardless of dollar amount. They also take into account what if that card was to be presented over the phone or over the internet. And every 6 months they reevaluate this and they take into consideration the amount of rewards that are being paid out. They take into consideration how much fraud is being committed using that card and what types of merchants are recipients of these cards. Complicated formulas, but it's an improbability to determine exactly how much you're going to be charged on every transaction. So what did the banking industry decide to do? They decided it would be a great idea to give you a flat discount number and how many cents per transaction, and maybe a different set of numbers if you use the phone or the internet. This is called a tiered plan. That doesn't mean a whole heck of a lot to you, but it should. It's a hedge. It's like playing blackjack in Vegas. The odds are in the favor of the house, 51 to 52% of the time. Play long enough, they're always going to win. And banks don't lose. You need to know that. So they know that they're going to lose on a transaction like an American Express, which is at 2.89 or 3.5%, but they're going to crush it when it comes to debit cards. And right now, 40% or higher of the transactions being done in America are debit card. There's just fewer credit cards out there. People are maxed. Maybe they've had a bankruptcy, whatever it is. More and more people are using debit cards. So if you're in a tiered plan, you're getting taken advantage of. More importantly, the Durbin Act, I know you probably don't know it, but I'm going to share it with you. Congress passed a law basically saying, hey, we have limited the amount that you can charge on a debit card. Don't believe me? You probably were receiving rewards on your debit card and now you're not. And that's why. They can't pay for it if they have a cap on how much they can charge you. But that savings is not being passed to you. It's going to your merchant processing company. Not the intended consequence of that law, but an unintended consequence. So, how do you change that? You need to shop, and you need to find the right type of contract. I would recommend that you are in a month-to-month contract. If someone has to lock you up for 4 years, why? Doesn't seem like they probably have the best rates. More importantly, if they have a high termination fee, why? That means that they want to protect their profits and they don't actually believe that you deserve to go somewhere else. So they want to lock you in as long as you can. But what type of plan should you pick? Well, you can go to another tiered plan and you may get a good deal, you may not. But what you need to understand is you're going to pay a much better, you're going to pay a lesser dollar amount, you're going to have a much better deal if you're on some type of a, we call it swipe save. There are other names out there, but where the actual physical cost gets passed on to you per transaction, and there's a small margin on top of it. You know, in that case, like for example, SwipeServe doesn't lose any money. They know that they're not going to lose, so therefore they can take that savings and pass it on to you. When that small margin is how much they make, and so that should be substantially reduced. I think how you get approached. Are you actively shopping or are you being solicited? If you're being solicited by a telemarketing company or by someone that just shows up in your shop that tries to earn your business, those are all commissioned salespeople. Well, how do you think they get paid? Well, they're going to get paid one of two ways. Obviously, they're going to have to pad that into the pricing they charge you. So you should be aware of that. You should be able to find what you need on the internet. You know, SwipeSave basically doesn't have commissioned, or SwipeServe doesn't have commissions for salespeople. We want you to use the internet so that you can save. The other thing that you should really consider is the equipment shell game. A good portion of the merchant providers out there have proprietary equipment or software that cannot be reprogrammed. And I think you probably own a computer and you understand why. If you want to leave, it's going to cost you a lot of money to do that. And I just think that's wrong. So we think it's really important that you need to ask the question, is your programs or equipment reprogrammable? If it's not, if it's proprietary, you're making a big mistake. It immediately limits your options in the future, which I think is foolish. Next, let's talk about these contracts. There are many people that are going, 2, 3, 4 years. But why not month to month? We offer month to month because, quite frankly, it puts the onus on us to make sure that you're getting the best deal. If you don't get the best deal, you're going to leave. If you're not getting the best service, you're going to leave. Well, how does that work? When you're talking to these companies, you want to ask them about their customer service. It's critical that your business always remains up and running and making money. When it's down, it's costing you a lot more than the sales you lost. It's costing your time and probably some labor, and I don't know how much hair you have, but you may start to lose some of it. We don't want to see that happen. So the important thing is you want to ask them about their service. In our particular case, we offer a 24-hour, 7 days a week customer hotline, and you can reach a live agent in less than 2 minutes to discuss specific questions like, what's this on my statement, how does it work, or I'm missing a deposit, I'm missing a batch, how long are these funds being held for? That's important. One of the other things you can ask when you're shopping around is, when will your funds actually be deposited in your account? On average, they happen within 48 hours. But a lot of industries are now moving towards 24 hours. I want you to imagine how difficult that is for your merchant processor to do. That actual physical transaction that you just did right now, and that's going to be in your bank account tomorrow, is going to take 45 days for all the banks involved to get the money where it needs to be. And that's because there's a minimum of 3 banks going back and forth. There's the bank that issues the credit card, there's the bank that is providing the merchant services, there's the bank that's receiving the deposit for that sale. A lot of people involved, not to mention interchange. Let's talk about termination fees. It's realistic that they're about $199, but there are some people out there with termination fees that are saying, hey, we'll just take the average profits that we make times the remaining months in your contract. That's just a bunch of baloney. You shouldn't be in that type of a contract. That tells me immediately you're being taken advantage of. And if you get a good deal, then you shouldn't be going back to them and ask them to match it. They've already taken advantage of you once. One of the things that we've developed at SwipeServe, which a lot of people have not, is an AMR, an annual merchant rate. You're probably familiar as a consumer of getting an APR when you get a loan for a car or your home or even a credit card for that matter. Well, what AMR does is it takes into consideration your base rates, all of the fees, and it also takes into consideration whether or not you're in a contract and the equipment. And this is really, really, really important because you're able to compare apples to apples. Most people don't want you to know what an AMR is. Most people won't even give you the tools to be able to calculate it. We want you to have that. So ask people what their AMR is. What are they hiding behind? This equipment shell game, not only is there equipment that you can't reprogram, but when someone comes knocking on your door, remember the salesperson you want to avoid because that's how they're getting paid as a commission, they're going to turn around and say, well, I saved you $2,000 a year, but you're going to need new equipment. And then they're going to charge you anywhere from 200 to 500% more than the actual cost of that equipment. So when shopping, you want to make sure that you're dealing with a company that's going to, A, try and reprogram your existing equipment first. It makes sense, you already own it. 2, if you have to get new equipment, you should be buying it outright. And you want to deal with a company that's not going to mark it up, 500%. God forbid you have to lease. I don't know why you would need to, but let's say you do. That payment's going to be somewhere between $25 and $35 a month on average, and you're going to pay 5 times more than that equipment costs. And they're going to put you in a contract because of it, because they don't want to lose any money. So some of the other products that you should be looking for that I think may help your business, a check guarantee program. If the merchant provider isn't offering it, it is critical. You can take checks. Essentially, if you present them the right way, they're guaranteed at a debit card rate, and you don't have to spend all of your efforts and time, basically being a collection agent, or even worse, letting that sale go. You get 100% of the deposits. There is a lot of talk right now about rapid loans. I'm sure if you're trying to get a loan from a bank, it's a pretty painful experience. You're not enjoying it, and it's not in the bank's best interest to give you money anyway. Ask anyone who owns a restaurant. Good luck getting a loan. However, the merchant industry recognizes that you need loans for all kinds of reasons. Seasonal activity, maybe you're in Arizona and it's summertime and everyone leaves. Or conversely, maybe you're in Detroit and everyone left because it's winter. So all kinds of things, or maybe you're related to agriculture or something like that, or you're in a resort town. That being the case, you want to make sure that they do offer this. And what they use as collateral for these types of loans is your merchant activity. And it's a really great service. We're not saying that you should get them. They're typically pretty high in interest rate, but you also don't have to give your right arm to get the loan. So it gets you through whatever it is that you need to get done very quickly. Very useful tool. We have a whole host of other videos that you're more than welcome to log into and view. But at SwipeServe, we just wanted you to know, we really appreciate the opportunity to share how the industry works. We just wanted you to know that we are, in fact, month to month. We do reprogram equipment. It's not proprietary based, so that you can take it wherever you want. We do have very low termination fees. We also do offer check guarantee and rapid advance loans. And all of our plans are our Swipe Save program, which is essentially we pass the cost of the actual transaction to you with a small margin. We hope you've enjoyed it, you learned something, and let's face it, it's important that you shop correctly and know what you're looking for. Have a great day.